When it comes to being profitable over time, this is literally the number one most important thing. This will save you more money than anything else. And in the long term, this will make you more money than any other strategy you could possibly implement. So make sure to like the video, make sure to subscribe to the channel, make sure to click that bell for notifications because we are bringing you the juiciest trading strategy videos here on YouTube. And guys, this is one of the most important things when it comes to managing your risk, ensuring that your losses are small and your profits are big. And that is implementing a good risk management strategy. Nobody wants to hear about this. Everybody wants to hear about that strategy that's going to give you that super high win rate. This strategy that's going to make you hundreds of dollars a day, thousands of dollars a day. Well, guys, the reality is it does not matter what strategy you use if your risk management is not on point. Here's why. I don't care if you have the best strategy in the world. You could wipe out months of gains with one or two bad trades because your risk management is not on point. And a lot of people don't understand what risk management is. What is risk management? Risk management means no matter what trade you enter, you are only ever risking 1 to 3% of your total trading stack. It does not matter if you are entering a trade that looks like this right here, where let's say you're entering a long position from right here, and your target is way up high, and your stop loss is below the low, okay? Or if you're entering a long position like the one I'm currently in right now, where my entry is like right here and my stop loss is literally right below, or the short trade I'm in right now where my entry is right up here and my stop loss is very tiny, right? Regardless of what trade you are entering, regardless of how big your stop loss is, you should only ever be risking the same amount of money every single trade. Whatever trade you are taking, if that trade gets stopped out, it should not be a different amount of money that you lose. Okay, now how are we going to best be able to set up our trades so that we can make the most money possible? Well, it all comes down to our entry. Position size, how much money we actually put on a trade, comes down to how far away is our stop loss. So let's think of it in two ways. We have two potential long trades that we're going to take. All right, long number one, we have a 1% stop loss. Okay, we have a 1% stop loss on long number one. Long number two, we have a 0.1% stop loss, okay, because we were scalping on a very low time frame and we had a very good entry. All right, in this case, we have a 0.1% stop loss. Now look at this. If we get let's say we have $100 in our account, okay, $100 in our account. If this trade gets stopped out, okay, we lose $1. And our position size for this trade right here, because let's say that, you know, we're longing this level. Our position size for this trade, if we are risking 1% of $100, that means we put $100 on the trade. We have a 1% stop loss. If we get stopped out, we lose $1. This trade over here, in this case, we need a 0.1% stop loss. What does that mean? That means we could put 10 times more money onto the trade than we actually have, aka 10x leverage our whole account. And if that trade gets stopped out, we are only losing $1. In this trade, we put $100 onto the position. In this trade, we put $1,000 on the position. In both trades, if they got stopped out, we are losing $1. Now, this is where people get confused because they use the same exact position size for every single trade, or they only ever put 1% of their account onto the trade. The way we're going to determine how big of a position size to use is how far away is our stop loss from the entry and how much are we willing to risk per trade. Now, this is where understanding how to trade on lower time frames becomes very advantageous, because let's say, for example, we are trading a very small local range like this range, right? This range right here that Bitcoin was trading in pretty much all day. If we zoom out here, we can see this is the 1 minute time frame, and we're basically just trading in this very small range all day, right? So if you know, for example, that you are looking to take a short trade from right here, then you know that you need a very small stop loss, because let's say, you know, you're looking to get a rejection from the top of the range. You only need a 0.15% stop loss. Even if we only get a move of like 0.5%, right? 0.5%. This means we're still making 3 times more potential profit than what we are risking, right? And if we get to move all the way back down to the low of the range, we're making 10 times more profit than what we are risking. And because we need less than a 1% stop loss, we can actually use some leverage to increase our position size without gambling, but still sticking to the 1% rule. But now we're making 2% on more money than we actually have while still abiding by good risk management. So scalping is very, very advantageous for people who are trying to grow a small account. Now, swing trading, on the other hand, let's say that we're trying to enter a swing trade. Of course, we're going to have to use a much, much smaller position size, and here's why. If we are, let's say, for example, taking a short from this high, like right here, we see that we're getting some 2-day bearish divergences confirming, we need to have an 8% stop loss. And if we only have $100 in our account, that means, after that 8% stop loss gets hit, we're only losing $1, right? That's crazy. Maybe if we're swing trading, we could lose $3, all right? 3% per trade. But what that means is even if we hit our final target of coming back down to these lows or even maybe the low 18s, if we're risking $1, right, we're only making $3 on this massive move because we're abiding by good risk management. Or maybe if we're risking 3%, we're making $9. Whatever the case, our risk reward ratio right here is we're only making 3 times more money than what we're risking. But if we're scalping, we could get that down to say now we're making 30 times more money than what we are risking. And so this is where the trade idea, the plan that you have in advance, comes into play with how big of a position size you're using, how much leverage you're using, and how much you're risking. Now, if you want to take advantage of scalping on ByBit with 0% limit fees, make sure to click the link in the description in the pinned comment because this will really, really help you out a lot if you're scalping on the lower term timeframes like we do in the Casper Crew VIP Discord, the long trade we're in right now. This is the long trade that we gave yesterday during the New York Open live stream. We literally gave the exact level. And also, guys, we have been crushing it in the Casper Crew VIP Discord, giving literally the exact high on last Wednesday from the price of 28,914. We literally came up to that exact level and rejected from to the dollar. Well, we were $2 above, and then we gave the level to long yesterday, the exact low. Now again, it's a learning community, guys. It's not a signals group, but if you want to really be enriched with a community of traders who know what they're doing, check out patreon.com/Jason Casper. If you want to learn how to trade, comprehensive course, check out the course, guys, jasoncaspertrading.com. For more information about that. But I wanted to make this video because I see a lot of people get confused about stop losses, about position sizes, and all that stuff. If you want to learn more about risk management, check out the course at jasoncaspertrading.com. That is it for today's video, guys. May everybody watching and listening be blessed in the name of Jesus, the Messiah. Even if you're not religious, I still pray you are very, very blessed. And I will see everybody in the next video. Peace.